please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Here we go. Seoul and Tokyo have just started trading on the dot as we arrived at a new hour. And what is the undertow in the markets today? We've got the Nikkei up 35 points as expected, as predicted by the SGX, and the Kospi is also edging up 0.2% already. Interestingly, the Topics Index is a bit slow to get going and still showing red, even though it is barely changed right now. Just give them time to get in sync. Now, in Japan, retailers, how are they doing in the wake of that miss? 2.2% increase for September, but the forecast was for 2.5%. Large-scale retailer sales gaining slightly less, up just 1.9% on the year. 7 & I Fast Retailing, Aeon and Takashimaya among the department stores there. And elsewhere, we're looking at Yahoo Japan, which posted earnings on Friday. And let's see what the shares are doing untraded as we speak. So far, 532. Sales rising 5% of the year to the 6 months to the end of September. Also Friday, Sharp posted their biggest halftime profit figure for a decade, and shares are currently untraded. They raised their annual forecast as efforts to rebuild their presence in electronics starting to show some signs of bearing fruit. Mizuho Financial announced plans to cut their global workforce by a third over the next 10 years, trying to boost their bottom line, and shares are slipping though. And then focus later today, Kobe Steel posted earnings after the bell. Nintendo and Nomura also post numbers today as well. Just a little FYI, we'll do the follow-up for you. Let's get to the rest of the markets, Matt and Sydney. But first, let's get back to June and find out what is actually happening in Seoul on this Monday. Hey, June.
Good morning, Bernie. We're looking at another record open for the Kospi. The Kospi opening up higher by about 0.2% on the top of the record close that we saw on Friday. Kosdaq also higher by 0.3% this morning, and the Korean won unchanged from Friday's levels. In terms of the stock that we're watching today on the Kospi, Daewoo Shipbuilding and Marine, no trade here. We're looking at 4 million sell orders coming in at the open. So you're looking at the stock price, which is at a base stock price of 44,800 won. We're looking at now we have an open price for Daewoo Shipbuilding Marine 15,700 won per share, down by its daily limit. But we are looking at a massive glut of sell orders waiting to be filled right now. If you look at the trading screen, in terms of Daewoo Shipbuilding and Marine, we are looking at the earnings showing a consistent uptrend for the past 3 quarters on the back of their cost-cutting measures. But in terms of the stock price, analysts are saying that it will not be anywhere close to the 44 million base stock price that they're saying. It'll be closer to 10,000. So you're looking at the stock just around where the analysts had forecast, between 10,000 and 20,000 won. And we'll continue to watch this stock throughout today on the back of the sell orders that are still waiting to be filled. In terms of the other movers that we're watching, airliners are one of these strong performers today. We're looking at the data coming out from this weekend showing that air passenger traffic in Korea for the month of September were up 4.7%, more than 9 million passengers using international and domestic flights out of Korea. And this is a surprise in that we are expecting, we are still looking at weakness from the Chinese markets flying in and out of Korea. And this was still the case for September, with passengers from China down 31% year-on-year for September, the 7th straight month that we're seeing a downtrend here. But then stronger than expected demand from passengers from Japan, Southeast Asia, and Europe offset these steep falls. So you're looking at a very strong day for the Korean Airlines at the start. That was a check on the Korean markets at the open. Matt, over to you.
Thanks very much for that, June. The Australian market, an hour into the trading session. We're off the highs that we hit a little bit earlier on, but we're still in positive territory, only just though by about 0.1%. 5 points higher on the ASX 200, 5,909, 59.75 on the All Ords. Aussie dollar recovering. Remember, we did see the market and the currency slide on Friday late in the afternoon as we approached the close on the back of that news that the Deputy Prime Minister had been expelled from the Parliament, the High Court ruling that he was not eligible to sit in the House of Representatives. So we saw that have an impact on the market, but we are seeing a bit of a recovery today. Banking stocks are looking mixed. It's going to be a busy week when it comes to the banks. We have earnings numbers out from the National Australia Bank. That is due on Wednesday, but it comes after NAB late on Friday announced that it had settled that rate rigging case with the Australian Securities and Investments Commission, paying $50 million and admitting that staff acted inappropriately when trading the bank bill swap rate market. Westpac is the last to deal with the allegations, and of course the CBA is not implicated. NAB shares are slightly lower, pretty much just sitting on the flat line there. Resource stocks weaker today. We've got the big miners like BHP Billiton, Rio Tinto tracking weaker in today's trading session, but only just. BHP off by around about 0.2%. Bernie, back to you.
Thanks, Matt. Matt on the markets in Sydney there. We've got a crucial week coming up in the US of A. Tax reform, a Fed meet, potential new boss to be announced, jobs, numbers, earnings, you name it. The president headed this way. Whoa, Dan, what do they say? When it rains, it pours. It's pouring, isn't it? US style.
Yeah, that's right, Bernie. OK, so first to watch will be the Wall Street Open. US stocks have now seen 7 straight weeks of gains, and investors are really questioning if earnings so far have justified those valuations. But there are plenty of risk events on the horizon for investors to watch this week. Of course, tax reform, for one, takes centre stage. The Republicans due to unveil details of their new plan this Wednesday. Meanwhile, the Bank of England could also be set to hike rates for the first time in a decade, while the BOJ is likely to stay the course. And President Trump is also likely to pick his new Fed chair this week, even as the FOMC holds a 2-day meeting and he heads to Asia. Now, we saw Treasury prices also rising slightly on reports that Trump pick is Jerome Powell. He's seen as being less hawkish than John Taylor.
I think Jay Powell, in terms of monetary policy, is probably a continuation of the Janet Yellen policies, at least for a while, until he sort of gets his sea legs in the chair. He's probably a little more conservative than Yellen is, but it's not a gigantic difference. The bigger difference would probably be on regulatory matters.
So all eyes on who will lead the Fed from next year. We're also watching earnings very closely as well. The earnings parade slows down a little bit this week, but we still get the likes of Pfizer, Facebook, Alibaba and Berkshire Hathaway all reporting results. Apple also says the iPhone 10 pre-orders are, quote, off the charts, and it's set to report earnings on Thursday. And last but not least, the latest non-farm payrolls report is also due out on Friday, with a rebound expected after last month's hurricane. The Reuters poll is for the unemployment rate at 4.2%, with 315,000 jobs being created in the month. So that could be a blockbuster number at the end of the week, Bernie.
Okay, thank you for that, Dan. Boy, it is a busy, busy calendar indeed. Deep divisions are clear in Spain. Meantime, thousands marching for unity at the weekend as Mariano Rajoy dissolved the Catalan parliament and called for fresh elections. Sri, I don't know if the word fresh elections are going to appease the separatists, but it's a very, very split region, Catalonia.
It is. A lot has been happening over the past 48 hours. So let's just try and make sense of it all. The first thing to say is that Barcelona did make that unilateral declaration of independence. That was given short shrift by Madrid. That pretty much invoked Article 55 of the Constitution, 155 of the Constitution. Their response was to impose direct rule. The big problem that I have with that, and that many in the market have with that, is that it does create a fair degree of uncertainty because enforcing that direct rule measure could be very problematic if the Catalan leadership does not go quietly. I want to bring in Spain's foreign minister on this and his view that Carles Puigdemont does not have legitimacy. This is what he had to say.
I don't think that the civil servants in Catalonia will recognize his authority, and we hope that we are going to restore the correct legal situation. We are going to implement Catalan law.
Right, so the date for your diary that is important for the markets as well is December the 21st. That is when these regional elections will happen. The initial polls are suggesting that the anti-independence parties have only a small margin over the independence movement. So the Sigma DOS survey is one of the first ones that we have. This was done for the newspaper El Mundo, polled only 1,000 people, so a small sample group, hardly representative. So this is the issue. Which side has a clear mandate and has support is going to be the issue that really clouds market sentiment, I think, in the here and now, in the run-up to December the 21st poll. So let's examine the market implications from all of this, Bernie, and whether it spills over beyond Spain and beyond the peripheral markets in Europe over here. The cleanest expression of all of this is going to be euro-yen in the currency markets, euro-dollar, of course, and of course dollar-yen. If we do see the market expect more risk on these metrics. And right now, if you look at these crosses, they seem to be relatively well contained. The other point that I will make here is that European assets appear to have been undergoing a renaissance. So is this new dynamic on the Spanish political scene and also getting closer to the Italian elections going to upend all of that? Is it going to chip away at this renaissance that has been going on in European assets? And then, of course, you've got this issue on the ECB side. Only last week, Mario Draghi did make it very clear that the ECB was still in the game, although the normalisation process has begun. So you've got to ask yourself, Bernie, whether politics was really at the back of Mario Draghi's mind when he made that decision, and whether he did want to keep some powder dry to really backstop some of these relatively weaker peripheral bond markets, especially given the political dynamics at play now.
Yeah, well, certainly kept us all guessing, right, with a dovish taper and all that. It's amazing how many new iterations of central bank policy we're finding. They can still squeeze new juice out of the old fruit. Thank you very much. Okay, there we go. 10 minutes into the trading day for Tokyo and Seoul. And how are we doing there? Okay, I mean, not a screamer, but we're gradually seeing increments there. It's interesting, Uwe, isn't it? The retail sales, they continue. Well, I guess 2.2% increase is actually good for Japan.
Yeah.
Or am I mixing that up with inflation numbers? If we had inflation at 2.2%, we'd go, wow, you go, boy, right?
Anything 2% is okay.
Yeah, I was just going to say, yeah, anything 2% in Japan is okay because it's the land of 0 point whatever.
Even in the United States right now, I mean, consumption in the GDP was quite low. So, you know, there's no wages. I mean, there's no wage increases in Japan. There's no wage increases in the United States. And consumption, obviously, is very much dependent on that. So,
Yeah.
better invest, but not enough consumption.
So you don't think you think this Japan thing is over before it even really gets started?
Oh, I'm not sure it really got started. I mean, it got a push from exports, but you know, how long is that going to last? At the moment, it's going to last as long as the world economic situation stays relatively bright. We have Europe growing at the fastest pace in a long time. And the US is not bad. It's, you know, if you take away the inventory correction there, it's still growing at around 2.5%. Europe a little bit faster, closer to 3%. So Japan will be able to continue to export and thereby stay afloat. Yeah.
What about the rest of Asia? Anything that excites you more than usual?
Not really. I was excited about a political appointment in China. I thought the appointment to the Politburo.
They had a bunch, didn't they? Yeah.
Yeah, but to the Politburo, this Liu He, the you know, architect of Chinese economic reform, being elevated from the Central Committee to the Politburo, that's a big deal. It's a big endorsement for that procedure.
And what's the market implication, if any?
Well, we see now that, you know, the industrial profits in China are very good. So they had the highest profits, I think, in 10 years or so. And that by itself provides for a sort of natural deleveraging of the corporate balance sheets, right? And that's a good process. And it's also what Xi Jinping and his reformers want. So, you know, that goes on, that's good, and it's good for the banks. So if you want to go into a stock market, a little bit late, should have done it just before the end of the Congress. If you bought China Construction Bank, then it would have been 5% up.
Aren't the banks a crowded trade, though? It seems to be the one place we can all agree on.
No, they weren't a crowded trade. They were, the crowded trade is the, you know, Tencent or Alibaba kind of, you know, actually banks are okay. And, the crowded trade was HSBC. They made a big move in July, and that's a crowded trade. But the other ones, the big four in China, I think that's fine.
But the way Xi Jinping sees the country evolving, you know, state-led, state banks are going to lead the way. They're going to absorb. They're going to take an inordinate amount of the credit risk, aren't they, in this next wave of Xi Jinping's China? No,
I don't think so. As I said, if the deleveraging actually occurs the way it's been going, and if you have a PPI, you know, producer price index above 6%. That really pushes up profits, right? And that's what's going on right now. So the real economy is helping this financial process very much.
Okay, so Chinese banks and insurers. Is there another place in Asia that's worth a mention, worth a discussion here? Well,
the best performing market is Korea, so I would stay there if I were there. And if you're in Korea, you want things like Samsung and so on. You know, it's a bit of a punt, right? Because you have to see what you're going to do with the political risk and how to hedge that. But to the extent that you can live with that, I think it's a very good market, and we'll continue to do so.
Well, either he's going to fly off the handle or he isn't, right?
Yeah, right. So it's a 0-1 kind of situation, and but you know, the zero is sort of far away from the reality, I think, at the moment.
Competition is getting fierce in the electric vehicle space. Bad for BYD of China, which issued a profit warning. Whoa, Sherry, this is a company that goes from good to bad to good to bad. BYD is supposed to mean build your dreams. Sometimes it's a nightmare, other times it's a dream. It's just, you can't escape.
Well, no, so there is that love coming from the government in China for this space for green cars, and this is one of the biggest players in the space, and it is actually happened to be backed by Warren Buffett himself. But this kind of love and this kind of support, or this kind of push for electric cars in the country can actually make this space a little too crowded and intensifying competition. So the company is saying that for the whole year of 2017, net profit could come down by as much as 20%. And we're already seeing that in these numbers. For the third quarter, net profit down 24%. For the first 9 months, also down 24%. And there were some whispers out there that maybe the stock is a little too expensive. For example, JL Warren Capital talking about how this is too dependent on government subsidies, and there was that big surge when it comes to its share performance since early September because of the announcement from the Chinese government's further push for electric vehicles. So the company is just coming out and saying that this profit could be hurt starting this year. And we've got other earnings. I mean, we've got airlines, Air China also reporting over the weekend a 31% of a rise when it comes to the third quarter net profit. But this is more about the currency story. So stronger yuan sort of covering up that low passenger yields, and this is exactly what we saw from other airline space in China. And we've got China banks. This is a space that you really want to watch out for, because we've got China Construction Bank reporting last week, and we've got China Bank of Communications reporting over the weekend. Not bad. Net profit up 3.5%, a little softer than what Reuters poll was looking for, which was 4%. No change in NPL. But we've got the rest of the big five reporting later today. They are ICBC, Bank of China, and Agricultural Bank.
Back to the BYD issue and the whole EV thing. You know, you would think that China, which is essentially, I mean, without saying so, they pretty much declared war on the combustion engine and said, we are open. You know, China, we're showing electric vehicles and, you know, electric technology the love. I mean, otherwise, why would Elon Musk and Tesla be talking, you know, with such ferocity to the Shanghai government about making cars in the Shanghai Free Trade Zone? I mean, it's going to be the next phase of China's industry. They already make electric buses. They already make electric taxis for export. You know, they're running around the roads of Hong Kong. They just need to get the infrastructure up to speed. I guess one of the worries is Chinese will aspire to more than the local names like they have historically, right?
Well, this is supposed to be the Tesla of China, right? And but when we're hearing reports about and whispers about how the Chinese government might not, well, maybe still loving the space, but not really supporting with enough or not as big of a subsidies for these companies, then maybe the companies have been too dependent on these subsidies, and then maybe we're going to have to see some dents in these numbers.
You know, I'm constantly amazed by what comes out of China. I was sitting on a bus the other day and I noticed it looks a little different than the usual British-made bus that I sit on, which is Leland Dennis, which is like generations and generations old. And I looked at the window for the imprint, the little brand, and it was a young man bus from China. Young man, yeah.
Build your dreams.
No, it was a young man. I thought, wow, what is this? The Village People, 1970s again. I'm sorry, that's way before this generation you have. Thanks, Sherry. Japan's Daiichi Koutsu Sanyo is reportedly partnering with China's Didi Chuxing to launch a taxi hailing service in Tokyo. Nihon Keizai Shimbun, that means newspaper, says the service could launch as early as next spring. Japanese company is the owner of Japan's largest taxi fleet. Unlicensed private vehicles are largely banned from being used as paid transport, forcing Didi to enter the market using taxi cabs instead. So it's a very highly regulated, controlled market, but this might be one opening to, or a nod toward the next generation. You're looking at where rich people live on the peak on Hong Kong Island. You're with us on a Monday morning, CNBC Asia Squawk Box 8:30. Markets here start in just under an hour. HSBC has been going through multiple transitions, but with its retail bank chief John Flint set to assume the position of CEO in February. Ahead of that, earnings are due out in a few hours. So, very exciting time here for HSBC. Emily is at Asia Pac headquarters at 2 Queens Road Central to share with us the wonderful news today. Emily.
Thanks a lot, Bernie. And of course, we are waiting on the big results announcement for the third quarter coming out at 12 p.m. Hong Kong time. That is at the midday during the lunch break. The Q3 results expected the pre-tax profits and the revenues to increase on year. At 3:30 p.m. Hong Kong time, we should get the analyst conference call, which will be chaired by Group Chief Executive Stuart Gulliver, as well as the company's finance director, Ian McKay. And just in a programming note, we will be speaking with Ian McKay in a first on CNBC interview at 1:15 p.m. Hong Kong time to just really get a deeper look into the latest set of numbers. As far as what we're expecting, an increase on the pre-tax profit and the revenue on the year-ago period. In the third quarter of last year, the company reported pre-tax profits of $843 million, and that was on revenues of $9.5 billion. The company already announced and underway a $2 billion share buyback, bringing in total something like $5.5 billion since the program was started about 2 years ago. So we will be looking as to whether or not they're going to be making any more announcements for these share buybacks. That has helped lift the stock. The Hong Kong listed Hang Seng shares of HSBC up 24% so far this year, year to date, helping to lift the Hang Seng index to become one of the best performers in major markets around the world. The UK listed shares up something like 15% year to date, and the US listed ADRs a nice 22% increase on so far this year. Bernie already mentioned the big announcement of John Flint to become the new chief executive. That'll take place in February of next year after the company completes the announcement of the full year results. Now, he comes from the retail and wealth management business, but he has spent years in Asia building up their global markets business, as well as working out in some of the Tsim Sha Tsui branches here in Hong Kong. So he will be, of course, replacing that of Stuart Gulliver, who has been with the business for the last 7 years. And Stuart Gulliver, in his time at the bank, cut something like 25,000 jobs and exited about 20 countries. So now from 87 countries, now down to 67. So they're going to be continuing the restructuring, the disposals, as well as the cost cutting. But this is an interesting move because just promoting within internally in the bank, and Mark Tucker deciding that he's going to be hoping to keep the ongoing HSBC current strategy. Bernie.
Okay, thank you, Emily, for that. And just another, call it 4 hours to go, give or take. Then we'll get the numbers from HSBC and talk to the CFO. Let's see how oil prices are faring today. They're certainly at the higher end of what a lot of people assumed was the limited range, given the fracking revolution and, of course, the possibility for any cracks in OPEC's agreement. Saudi Arabia's Crown Prince Mohammed bin Salman says the kingdom would be willing to back an extension of OPEC cuts beyond next year's March expiry as the cartel gets ready to meet next month. Energy Patch, of course, has been going through some fundamental changes, not least changes brought on by shale. Let's bring in Sri for more on this. Sri, I'm looking at the NYMEX and Brent there, and it's a big gap there. I mean, at $6, this is when you get opportunists go into the market and say, whoa, we got to take advantage of that, do some arbitraging if we can.
Absolutely. Watch that arb because it's wide open. And I think the first thing to say, as you said in the headline, that endorsement of the Saudi policy position in terms of extending the cuts next year doesn't get any stronger than coming from MBS himself. And that's one of the reasons why we have hit $60 a barrel on Brent crude. That is a very, very important marker, I think. But the unintended consequence, as you and I know, Bernie, is that it does encourage more shale growth from the shale heartlands in the US, but also there are some very important export dynamics coming out of this as well, especially for our region. You mentioned the wider Brent WTI spread. That encourages and that pulls effectively more US cargoes east of Suez to this part of the world. So that premium that Brent enjoys over its US counterpart is now at its highest, or its widest, in almost 2 years. So it's very, very profitable to ship that US crude over elsewhere to Asia especially. And then, of course, you've got OPEC supply restraint, so the door is open from that metric. This is a relatively new dynamic that was introduced after the Obama administration lifted a 40-year-old moratorium on crude exports. Let's bring in John Driscoll now, Chief Strategist at JTD Energy Services, and he joins us now from Singapore. John, you're quoted in my piece on this, and we had a great conversation about a month or two ago about this dynamic. What does the US have to do, in your opinion, in order to maintain that edge that it has right now in terms of its exports?
Well, I think it's a couple of factors. One, as Bernie correctly noted, $6, actually $6.50 a barrel on the spread between Brent and WTI. That does open up the arbitrage. That provides that incentive. U.S. production and output is estimated to be going up to almost 10 million barrels a day from its current level of 9.4 million by next year. If they maintain those levels, if you have this wide gap versus Brent, that's going to keep that window open for export flows into Asia. And it's certainly the Asian buyers welcome an additional crude, another serving on the buffet table, another supplier they can negotiate with, and it provides competition and challenges to the OPEC, non-OPEC cartel.
You and others in the market have somewhat controversially, John, described the US as the new swing producer, with the emphasis on production. But in terms of exports, US volumes are still, yes, they are at record levels, but compared to what the Gulf producers are putting onto this market, still, despite the OPEC curbs, still a relative drop in the bucket, right?
It's a fairly small volume, and I would say the proper terminology is not swing producer, but marginal producer. And if you're exporting 1-2 million barrels a day, yes, compared to Russia, compared to the Mideast producers, this is a fairly small volume. But when you throw it into the mix and it becomes that marginal barrel, that one extra barrel that gets considered, that gets weighed against other alternative supplies, it can be very disruptive. It can actually cap a market. It can create downward pressures. But for right now, I would say with the inventories moving down, markets rebalancing now, we're seeing more volatility. We're seeing more upward momentum. We're seeing a return of the geopolitical risk premium.
John, Bernie has a question for you.
John, Bernie up here. Just a quick question on the politics of this. I mean, it was Obama who ended what was a 4-decade ban on U.S. exports of oil. I mean, are there any political considerations? Is it full steam ahead politically? Is anybody questioning it in the administration right now?
Well, I think the move by the Obama administration to lift this ban has been a real boon to the U.S. energy industry. It allowed producers to capture export parity for their resources. Prior to the lifting of the ban, they pretty much were captive. They could only sell into domestic markets. So I think that's been a boon to the industry. Obama has probably given them the greatest help in the last, what did you say, 40 years. This has opened up the market, and it's been bad for U.S. refiners because they've lost essentially this subsidized captive barrel.
Yeah. Is there is the U.S. industry limited at all by infrastructure? I mean, I note that the only deep water tanker port in the Gulf is the Louisiana offshore facility. Doesn't that kind of limit how quickly they could react to market forces or demand?
Well, the Louisiana offshore platform you referenced, the Loop, that actually will develop export capability at some point next year. That's a deep water port. They will be able to load very large crude oil carriers directly across the dock without lightering or ship-to-ship transfers. I think the infrastructure will fall into place. You can load large cargoes out of Corpus Christi, but again, it requires more time, ship-to-ship transfers. I think the infrastructure will fall into place to support, export movements.
John, Mars and Poseidon, apart from being the Roman god of war and the Greek god of the sea, they are also the US crude oil grades that are really at the tip of the spear, leading this export charge into Asia. Just talk us through why they are in demand. They are medium sour grades of US crude oil. Why are they in demand amongst the Asian refiners?
This kind of crude appeals to a type of refiner. In Asia, you have a more developed downstream infrastructure, companies like Reliance, Essar, Formosa, SK, GS Caltex, better complexity, larger scale operations. They're configured to extract a maximum benefit from the sour, heavier grades. The stuff coming out of the Permian, Eagle Ford and all that, light crudes, condensates, those appeal to a different type of refiner. But the Mars Poseidon, medium sour, that's a great export grade, more economical for a certain type of refiner. And once the infrastructure like Loop falls into place, I think you'll start to see this arbitrage really open up.
John, can we just get back to the price dynamics of the market and talk about direction? Because you and I were talking about this offline earlier, the risk premium rebuilding in the market, and that is because we are really starting to see some serious normalization. Inventories are not as large as they were before. Therefore, the market is more susceptible to supply outages, right?
We've basically, OPEC's target, OPEC, non-OPEC's target was to hit, was to reduce inventories to the 5-year average. And since the beginning of the year, they're halfway there, hence the extension of this. But don't forget also, demand has been fairly steady. We're seeing north of 3% global GDP growth. So as inventories have drawn down, you've still had decent demand. What this all means is in an oversupplied environment where you have surplus inventories, you've essentially got shock absorbers. You can weather price dislocations and disruptions. But as you draw down inventories, you don't have that kind of cover or protection. Events in companies like Iran, Iraq, Libya, Nigeria, Venezuela will have a dramatic effect. The geopolitical risk premium is back. Markets, I know you're going to pin me down on which way are we going. All I'm going to tell you is it's going to be volatile. It's going to be more volatile than what we've seen in the past because we don't have the inventory cover.
All right, you've dodged that silver bullet from me because we've been saved by the bell, John. We'll leave it there. Thank you very much indeed. So who needs a wrath of the Titans, Bernie, when you've got Mars and Poseidon and John Driscoll, Chief Strategist at JTD Energy?
Yeah, we've got gods galore right here on Squawk Box. What a treat to treat. It's all I can say. Yeah, I'm God of War. I don't know about that, though. A little bit violent for my... Okay, Kospi in the green like so much of Asia on this Monday, but the couple stocks that are bucking those gains in a big way. In particular, we've got those. So, question is why, June?
Well, Bernie, both of them are tanking, and both of them are actually trading back in trade for the first time after a very long trading halt. So it could be a lot of the factors that happened during this trading halt being priced in very quickly in the market. So you're looking at some very dramatic moves for Daewoo Shipbuilding and Marine, and also Lotte Shopping, which has come back online today. So starting with Lotte Group, Lotte Corporation is a new company that has started trading today on the Kospi. This is their new holdings company of Lotte Group, opened at 64,001. Now it's down about 1/3% from the opening price. But Lotte Shopping is the other name that we're watching. We're looking at losses of about 5% for both Lotte Shopping and Lotte Chemical. And Lotte Shopping at one point this morning did drop down more than 8%. And this split off of Lotte Shopping and Lotte Holdings Company was expected, in that the board of directors decided to split off the operational and the investment arm of Lotte Group's operations into two separate companies. One was to simplify its holding structure, which came under a lot of scrutiny during the power struggle between the brothers, and the other one was to make sure that Chairman Shin Dong-bin has a stronger control over Lotte Group through this split off. So in terms of the market reaction, you are looking at a very weak day for Lotte Group shares in general, but also going over to Daewoo Shipbuilding and Marine, even despite the strong numbers that we saw in their earnings for the past 3 quarters, which have not been reflected in the stock price, we're looking at a very steep drop for this name on the first day of trade after it comes back on the Kospi after 16 months being off the trading floor. So you're looking at the loss of 18% for Daewoo Shipbuilding and Marine. The Korea Exchange says that Daewoo Shipbuilding and Marine's financial situation is now back to normal. They're saying that its accounting audit results have been good, and also that they're saying that the earnings have normalized so far. In the first half of this year, the Daewoo Shipbuilding and Marine recorded a net profit of 1.5 trillion won, so about $1.3 billion US, operating profit of 880 billion won, and they have been staying in the black for 2 straight quarters as of the second quarter, and the third quarter, which we don't have the numbers for yet, was also expected to come in the black. So Bernie, some strong earnings numbers, but in terms of the stock reaction, very much down today in Korea. Back to you.
Okay, thanks, June. Elsewhere, China says it's getting a grip on its peer-to-peer lending industry. At the country's first China Internet Finance Forum in Beijing, officials say the number of platforms had decreased significantly by nearly 1/3 from the end of 2015. Listen.
The overall risk level of the internet finance is decreasing, and the momentum of frequent occurrence of risk cases has been initially curbed. The tendency for the fittest to survive among P2P companies has been intensified, and the environment for the development of the industry is being gradually purified.
That tune is kind of catchy. That was PayPal's new money campaign, launched during the Super Bowl last year, the company's first major one since it split off from eBay. Since then, the stock has more than doubled, its market cap eclipsing that of Amex, and as it seeks to make further inroads into the lucrative Asian markets, it's facing perhaps one or two challenges in the $5.5 trillion China mobile payments market. It's up against local heavyweights like, say, Alipay and WePay. Leanne Sheraton is Vice President of Marketing APAC at PayPal and joins us from Singapore this morning. Leanne, thank you for joining us. Good Monday morning to you. You know, I was just thinking about all the different payment options. And just using where I work and live here in Hong Kong as example, 13 licenses have been issued, including Alipay Wallet, WeChat Pay, and then you got locals like Tap and Go, TNG Wallet, et cetera, et cetera, et cetera. When you have so many variations blossoming, where does it leave a company like PayPal?
Bernie, what we're currently seeing is a massive acceleration in the global digital economy, which is opening up enormous opportunities for consumers and merchants all around the world. For consumers, it's offering up choice of choosing how they want to pay and where they want to pay, and access to being able to buy from countries all around the world. And for merchants, that means that they have access to a new global audience and ways to sell on new devices and new channels. There is so much opportunity globally, and in this region, we feel at PayPal we're just really well placed to really add value to this segment.
Right. PayPal, of course, was a pioneer in this space, and I still use your service because I'm used to it. I feel safe with it. I know it inside out. I know how to navigate it. I have to admit, though, I tend to use it more in a computer setting, whether it's a laptop or a desktop, and some of us still use desktops, believe it or not. When it comes to mobile, I haven't quite gotten with the program. Am I an outlier? Am I an exception, or am I still am I still representative of the bulk of the people? Am I basically your target for the future?
Well, first of all, thank you. Thank you for your custom. We appreciate it. We have 2 decades of experience in this space. The mobile payments for PayPal grew 50% year on year last quarter. So mobile is definitely the future. And what we know is that 66% of internet traffic in Asia Pacific is now accessed from a mobile device. So our customers of the future are on mobile, and what we are passionate about doing as a business is developing products and solutions that really take advantage of this trend. A great example of that is the dedicated mobile app that we developed just for merchants for this year. And this enables them to invoice on the go from this app. It enables them to check their cash flow. It enables them to contact customers directly from this app. And what solutions like this are doing are fast-tracking the adoption of our customers of buying and selling from a mobile device.
Right. How does this dovetail with your Venmo strategy? Is Venmo present in Asia? Is it part of the new phase of your Asian expansion? And how is it going to? How will it work with your existing channels?
So Venmo is an incredible product that was born in the US that was targeted against a really specific segment of millennials who have made payments social. I never thought that someone would be interested in what I'm eating for dinner and how I paid for it, but Venmo has absolutely tapped into that space. The focus for Venmo right now is on the expansion of paying with Venmo through the US. And right now in Asia Pacific, we're really focused on the PayPal brand and adding value to merchants and helping them reach a global audience and giving consumers access to the tens of millions of merchants we have all around the world.
Right. And how do you differentiate, Leanne, in Asia? Again, when you have so many homegrown services, how do you make sure that people remember PayPal, or they default to PayPal, when they're doing certain transactions?
Bernie, I think you really touched on it before. The 2 decades of making consumers feel that it's safe to buy on the internet and giving them the trust and confidence to manage and move their money in the digital form. For merchants, we've moved beyond a shopping button on a website to offering tools and platforms that enable them to thrive in the mobile world. So in terms of differentiating and thriving in what is a really competitive environment, I think while we continue to remain focused on our customers and adding value to them and helping them realise all of the opportunities that this new global digital mobile economy is offering up, we will continue to thrive and prosper as a business.